Welcome to the Forex Pro Charts weekly analysis for the week of December the 12th, 2010. This week we will be analyzing the Euro-USD pair. Okay, as we take a look at the Euro-USD this week, we see that price is virtually midway in between the edges of our trading field as well as the monthly armpits. As you know from previous videos, if you've been following along with us, the upper edges of our trading field are marked with these solid black lines, upper and lower edges, and these are the monthly highs and lows. In addition, we have marked monthly armpits with these thick dotted black lines at both ends, and also the weekly armpits. The area in between the monthly armpits and the edge of our trading field, the outer edge of our trading field, is the area where we would be most likely to see price reverse. And of course, once you get above the weekly armpit, then that likelihood increases. So taking a look at the monthly armpit, we can see that the overall trend is up. However, that trend has been flattening recently, and possibly price could have reversed up here when it hit this outer edge of our trading field, moved back down. In fact, it did reverse as far as we can see that it went all the way down to this previous monthly low. But whether price will continue further down or back up, we will need to wait and see. When we see that price is in the middle of our playing field, that means basically that price has a lot of room to go either direction, and that means that we have the opportunity to make pips no matter whether we take buys or sells. Okay, now looking at the EU on the weekly chart, we see where price had formed this zone here on the weekly chart as well as on the daily chart, and then has been retracing back from that level since, and that on the way down it formed another zone. Now again, if you've been following us, you know that we always mark the zones on the daily chart, but that when we see this rally base drop pattern or the drop base rally pattern on the weekly chart as well as the daily chart, that strengthens the zone, and we like to see that. And certainly this zone here, this was a very nice clear rally base drop pattern. Price moved strongly out of the zone, and we have achieved a 3-to-1 reward to risk ratio. In other words, price has now moved 3 times the area of this zone before reversing, if it does reverse back up, before reversing back up to it. And so those are the main criteria that we're looking for in a zone. So this zone, when price does move back up to it, should be a very nice zone. As you can see, it looks like it has a fairly low risk. At least the 60-minute armpit marked by this line here is well up into the zone, and we also have a 5-minute armpit. However, currently price is moving down. As I said, it formed another resistance zone here. Now this zone is not quite as nice. It has still the nice low risk, but it does not have the rally base drop pattern that we like to see. Oh, excuse me, on the weekly chart. Excuse me, I'm sorry. I just got out of the hospital yesterday. I'm a little bit tired. Okay, so it doesn't have the pattern that we like to see on the weekly chart. We will look at it on the daily chart, and of course we can still trade it. But oftentimes when we don't see the pattern on the weekly chart, we are strictly looking for the bounce and not necessarily for long-term price moves when price revisits the zone. Okay, now price is moving down to this area. We would anticipate to see price continuing to move down to this area over the next few days or weeks. Here we have 2 support zones stacked on top of each other. We'll look at those in a little more detail on the daily chart. What that means is that there is a strong likelihood for price to turn in this area because it has formed 2 zones, but it does sometimes make it a little bit more difficult to determine exactly where, and you need to demo trade these stacked zones quite extensively before deciding how you would like to trade them. There are several options available. I think we have a little time today because actually there really wasn't a whole lot of action on any of the currency pairs this week. So let's talk a little bit about stacked zones. There are several options that you have. You can, of course, just trade each of the 60-minute armpits as we normally do, assuming that the risk is low enough and fits in with your trade plan. And many traders do like to do that. The other thing that you could do, excuse me, I'm very sorry. The other thing that you can do is take a look at the zones. Maybe you want to trade only the lower armpit, depending on how much distance there is in the two zones entirely. Sometimes you will have a trend wall coming nicely underneath a particular armpit that will strengthen that particular armpit for you and make you choose one zone, one armpit or another. And sometimes you'll have a psychological barrier at one of the armpits that will make that armpit more stronger for you. So depending on what your particular trading goals are, whether you're strictly looking to trade the bounce or whether you're looking for a little bit longer price move, may determine where you want to place your trades. The other option that you can do is you can place trades, as we said, at both 60-minute armpits, assuming that the risk fits with your parameters, and just place a slightly smaller trade, maybe place a half a lot on each of those trades instead of placing a full lot on both of them. Because the risk that we have is that we do sometimes see price spike down into the next zone and stopping a trade out, and then it will reverse and move. So sometimes the actual turning points in these stacked zones are not quite as clear as they are in the zones that are just out there by themselves, like this zone. Okay, I think that's it for the weekly chart. Let's go ahead and take a look at the daily chart. Okay, now looking at the daily chart, we can see just by looking at the chart that over the last 5 days we didn't have any action in any zones. We did not see any price action on this pair, any trade action on this pair this week, as we really didn't see on any pairs this week. We had one trade on the New Zealand pair, but it was the second revisit to the zone. And most pairs had this kind of a pattern where price had retraced in the previous week, had done a retracement, and then price reversed this week and continued back down in the previous direction. And we saw this on the EU as well. So again, we're looking at these stacked zones, and let's see if we can get those up a little bit more clearly. Looking at these stacked zones on the daily chart, we can see that each of these zones is a little over 100 pips, so that the 60-minute armpit on each zone is fairly reasonable if you did want to trade it that way. Looking here, you can see that price came back, spiked basically down, not quite down, well, spiked down into this zone here, and then when it came down the second time, went right on this 60-minute armpit of this new zone, which is why we formed that zone. So it looks like if indeed price is moving up a little bit or narrowing its range a little bit, that's where we often see these stacked zones where price is narrowing its range a little bit and doesn't quite make it down to the zone again. So this zone is pretty far down. We may see price reach that level, but you may wish to trade this 60-minute zone if price does return down to that level, and then make a decision whether or not to trade this zone down here. Risk is a little bit higher on this particular zone. Down here, risk is very low, as the 60-minute and the 5-minute armpits are just right on top of each other and right at the bottom end of that zone. So again, when that risk is so small there, a lot of traders just go ahead and take that trade when they see less than a 20 pip risk, because it's just again such a small risk. So again, last week we saw price continue the move down, whereas the previous week we had seen a very strong retracement at the end of the week, and now price looks like it is continuing down, although it's not moving as strongly. So we'll be interested to see which direction price takes this week, not only on the EU but on a number of the other pairs which followed and had very similar patterns to the EU this particular week. Let's go ahead, just for grins, take a look at the hourly chart. We normally look at that to see the trades that occurred in the previous week, but let's take a look at it as well. Okay, so looking at the hourly chart, we can see where price is following this daily trend wall down, and also has bounced off of this daily support trend wall. and that price is just continuing to bounce off of that instead of making a break out and repositioning that trend wall. So we'll be interested to see if that pattern continues. We would like to see price move in one direction or the other this week, move down below either its previous low from the previous week or move up higher. But on this pair, as in most pairs, we will actually have to wait and see which direction price takes this week. Okay, so that is it for the EU this week. For more information or to subscribe to our full analysis and charting services, please go to www.forexprocharts.com. And again, on forexprocharts.com, you can get a $1 weekly demo to our subscription services. We have 3 levels of subscriptions, all of which include a full written analysis every week with chart screenshots and written information on each of 10 major currency pairs. And then the second subscription level also includes trade alerts that we send out to our enhanced subscribers every week. And for premium trading services, you can also obtain our charts and the weekly downloads to the prepared charts. So we would encourage you to go ahead and go to our website, get a free weekly or a $1 weekly demo, and take a look at what we have to offer. We look forward to seeing you back here next week. Have a good week trading.